So we started earnings season yesterday, and that's a volatile time for the stock market. And in this afternoon's webinar, we're going to talk about how you can make money during earnings season, and more importantly, or as important, avoid the landmines, because earnings season is a very, very tricky time, as we will see in a minute. Now, I'm doing today's webinar from our home office, so if you hear a couple of barks in the background, that's because Scotch, our new Cairn Terrier, the newest member of the Chaikin community, is wandering around. So a little bit of my background, other than dog lover, 50 years on Wall Street, 35 years using technical analysis, but always in conjunction with fundamentals, which enabled me to survive 10 bear markets. For 5 years, I ran the op department at a major brokerage firm, doing technical analysis with option strategies. Now we use fundamentals along with technicals to help make options traders more profitable. And based on everything I learned in 30 years of working with institutional investors, I created the Chaikin Power Gauge Rating in 2010, which was really a culmination of my life. Took everything I had learned, as you'll see in a couple of minutes, from very successful institutional money managers, and built a fundamental indicator. Because when I ran an options department, I confronted the reality that 95% of traders in the options area lose money. And the reason is they didn't have a strong fundamental viewpoint, what we call a directional edge. So we're going to talk about the Chaikin Power Gauge Rating and then how you can use it during season. I'd like to start off with a poll to take the temperature of the audience. So Josh, why don't you set the stage for that?
All right, everybody, you can vote in the poll. The question is, are you looking for buying opportunities or are you bearish? And we'll just give it.
So we're basically asking you whether you're looking to buy stocks here, bearish on the market, or spooked by volatility and on the sidelines. And if you'll submit your answers, Josh will put up the results here in a minute.
Give a few more seconds for the results to come in. All right, and we will share this with everybody.
Josh, we seem to have lost all. Here we go. 48% looking to buy stocks, 25% bearish, and a lot of people spooked by volatility. Now, this is interesting. We did a webinar a week ago, and about 85% of the people were looking to buy stocks. So maybe the rally that we've had in the last week has taken the edge off the buying opportunities, but we're going to start all of that in this afternoon's webinar. So just to start off, let's look at the market. Very, very important to have a sense of what the market's up to and where we think it's going. And what sort of typifies this market is that we've gone from an uptrend on autopilot in 2017 and for 6 months, middle of 2018, to a roller coaster of a correction. If we look at a one-year chart of the SPY, the ETF that mirrors the S&P 500. By the way, this is the most actively traded instrument in the U.S. market. So it reflects both individual investors, but more importantly, institutional investors. And what they're doing in this ETF is reflective of how they are positioning themselves in the market. Going back to the beginning of 2018, we had a very sharp drop off a peak of 28.43 in the S&P 500. We came down more than 10% on a losing basis. And you do that, as we'll see on the next slide, W bottom is what you normally see. You get a rally, sometimes you get two rallies, and then you come back down and test those. And that's what we did in March of 2018. And then we went back into that sort of end on autopilot. We broke above 2000 and made a peak in September at 29.40 on the S&P. And everything looked pretty rosy. And then Fed Chair Jerome Powell made some how shall we say, inelegant comments about the future trend of interest rates and the Fed unwinding their balance sheet. The market took it personally, and the sell-off accelerated. And then all the bears came out of the woodwork, and we had talks about recessions and global slowdown and interest rates killing the rally and so forth. And when we took that 2,800 level, which had resistance, we sold off almost immediately to 2,600. Now, we had a series of rallies very similar to what we had in February, March, and they ran into resistance at 2,800, which was finally broken in what I'm affectionately calling the Christmas Eve massacre. A spate of bearish accelerated by high-frequency trading programs at a time when the liquidity in the market was drying up, because it normally does in that Christmas to New Year's period. And instead of forming a W, which we thought might be happening, we just came straight down 2350. We had a decline of 19.9%, just under the 2020 level that defines a bear market. You'd think these things matter, but they seem to. And now we've gone almost in a straight line up to the 2,600 level again, where they broke down. And in my weekly market letter, I said I thought it was going to be difficult to get through 2,600, but in spite of a lot of bad news today, the Brexit vote in England did not go Theresa May's way. The Parliament rejected it. We had a couple of potentially negative earnings surprises from the big banks, but in spite of all of that, the market closed very strong. So let's try and put putbacks into perspective. When we get a decline of 5 to 10%, and there have been almost 80 now, updating this chart from early in 2018, in the last 74 years, we call that a pullback. They average 6% or over in about a month. You take a month to go to new highs. When you have a decline of 10 to 20%, we call that a correction. And there have now been 28 of them since 1945. They average 13%, and typically they last for 4 months. The peak of the market was September 8th. It's now January 15th. We're almost at that 4-month average decline length, and the 13% average decline and has been exceeded. Interestingly, the average recovery time to new highs is just 3 months. So there's nothing unusual about what's going on, but the volatility certainly spooked everybody. Now today's action and the fact over the last 2 weeks, the market tended to close strong every day, which reverses the pattern we were seeing in November, December, is confirmed by what normally happens after a low in the midterm election year, which was 2018, 32% rally from the bottom in the midterm election year. So 2350 times 32%. Let's call that about 720 points. We're talking about a potential rally to 3,100 on the S&P. So there's plenty of potential in this market. I had been looking for to divert the bottom, because typically when you get a maximum number of new lows and the market also makes a new low, you come down and have a retest. Today's action again makes it look as if a retest is less likely, and we are in earnings season. And then finally, to put it all into perspective, we had 2 high volume thrusts. This is a pattern that was identified over 30 years ago by Marty Zweig, famous market strategist and money manager. And when you get 2 upside volume thrusts, where 95% of the volume is in the up stocks within a 10-day period, you usually get a bit of a pullback. We're not seeing that right now, but 6 to 12 months out, the market is typically much higher, confirming that pre-election year pattern. So there's plenty of upside potential in the market. The question is, Will higher interest rates derail it? And the answer is no. The market is rejecting that thesis that was all over CNBC for months. When you get higher interest rates and earnings are rising, it's bullish. It means there's loan demand. It means the market going higher. It's a bullish area. We think that's what's happening in 2019. Lots of talk on TV about a recession. Now that there's no sign of a recession, and the indicators that normally turn down, like leading indicators from the conference board, 12-month moving average of housing starts, or a yield conversion, or number of unemployment claims turning up. They're talking about earnings recession. That's two quarters in a row of declining earnings. There's no indication that that's happening. People they're projecting, trying to get airtime on CNBC. So if there's no economic downturn likely to happen, no recession for the next 12 months, why did we see such a sharp drop in the market? Well, it's because fear gripped the market. CN has developed a sentiment indicator called the Fear Index, and that takes over when emotions are driving the market. Now, it's moved out of the extreme fear category, still what they call a state of fear. And when the market is fearful, what we've been saying for the last month is, listen to Warren Buffett. Investors should be fearful when others are greedy, and greedy only when others are fearful. So we're going to be looking for buying opportunities in this webinar, but also, as we should show you how to navigate potential landmines that typically blow up during earnings season. Now, if you have a bear view, and 25% of you did, here's how you can benefit downside. We love vertical spreads, and on the long side, vertical call spreads. They reduce the cost of being bearish. So you could buy an S&P ETF, the Spider 260 put that expires on March 1st for almost $6, or you can do what the pros do, which buy that 260 put, but offset the cost, reduce the cost by selling a 246 put against it. You've, in essence, from $359, hedged a 6% decline for a $26,000 portfolio, or given yourself almost 300% of downside potential if you want to put on speculative trade. We're looking for what to buy and sell in this webinar, and our solution to that is Chaikin Analytics for both iPad and desktop. Applying everything we do at Chaikin Analytics is the idea that fundamentals drive the market, but that emotions drive it to extremes. And haven't we seen that in the last 3 months? And before that, in February and March of 2018, for me, the path to profits has always been to combine fundamentals with technical. And because we've taken this unique approach with the Chaikin Power Gauge Rating summarizing the fundamentals and just really 2 technical indicators, Chaikin money flow and relative strength, attracted some interest, very successful trade investors like Dr. J, John Najarian, like Jim Cramer, and some of the old institutional clients that we have, Soros, hedge fund, Fidelity Investments, and so forth. It's a unique approach because people are typically either fundamentally driven or technically driven. It's that combination of fundamentals and technicals that has enabled us to cut through clutter and help traders and investors make smarter investment decisions for 10 years now. Underlying everything we do is the Chaikin Power Gauge Rating, because if you have that final edge, what we call a directional edge, your trading, your investing will be more profitable and be a GPS during earnings season. Can help walk you through that minefield when companies either disappoint or out from Wall Street estimate. Now, what's interesting about this earnings season is that analysts have been cutting their estimates heading into earnings season. When that happens, you typically have positive overall market performance during earnings season. Now, in the last two earnings seasons in July and October, even stocks that reported positive earnings sizes were punished with sell on the news reaction. So it was hard to make money during earnings season in July and in October. So far this year, an earnings season started yesterday with Citicorp and continued today with United Health and JP Morgan. Company being rewarded for positive earnings surprises, and even when JP Morgan disappointed, we saw the stock react to the upside today, to the downside. So earnings seasons are tricky, and this one is set up for buying, which may push the market through that 2,600 level, something I thought was going to be difficult to achieve. Now, the Chaikin Power Gauge Rating cuts through the clutter. It's all that fundamental data on the right side of the screen and distills it down into gauge on the left, in this case, Starbucks, with a very bullish rating. Something interesting, Goldman Sachs downgraded Starbucks 2 days ago. The stock sold off to the 62 level and then rallied back above 64. These 20 factors in the Chaikin Gauge Rating distill down what institutional investors look at every day. They look at value, growth, technical, and sentiment factors, and we monitor all of them in the Power Gauge for you. Within each of those 4 primary factors, 5 sub-factors. So a total of 20 factors. And the Power Gauge works because these 20 factors are what successful institutional investors have been looking at for the last 50 years. The trick in creating a fundamental quantitative rating is that the market is comprised of participants, players, investors, traders, all have different styles and different time horizons. So when I went out to create the Power Gauge Rating, I drew on everything I learned from value investors like Warren Buffett, growth investors like Peter Lynch at Fidelity, hedge fund managers, so forth. Power Gauge Rating works because it's based on how Wall Street works. And in the Power Gauge Rating, we have earnings surprise, which is very relevant here during earnings season, and they tend to persist over time, and they need analysts to raise their estimates. So what you're going to see in the 6 weeks is analysts responding to positive earnings surprises, also company guidance, and adjusting their up or down. And analysts' estimate revisions are the single biggest short-term driver of stock price movements. That's why earnings season is volatile. And we also have industry group relative strength because big trends, and we're going to see a group that's had a reversal of trend at the end of the webinar, tend to last for significant periods of time. So how is the Power Gauge done? Well, life to date, we're going to update this for 2018 in a week or so. Over an 18-year period, the very bullish stocks in the Russell 3000, that includes small, large cap stocks, value and growth stocks, up an average of 20% if they had a very bullish rating. Very bearish stocks up only 1%, and that's after a 10-year bull market. In 2015, it was very important to know which stocks had very, very bearish ratings, because the energy stocks went into their own bear market, as did small caps. The Power Gauge picked that. The very bearish stocks, the Power rating down 17%. We're going to see in 2018 where the Power Gauge identified torpedoes, stocks where that silent price action can blow up the portfolio like a torpedo. And they typically come in stocks that you love and you're unwilling to part with. So we're going to look at some examples of that. Now, I'd like to start out by showing you 2 very profitable patterns. classic Chaikin bulls where the power gauge rating bullish, stocks outperforming the market, and Chaikin money flow is strong, indicating that institutions are buying the stock. So here's an example of a classic Chaikin bull in 2018, Microsoft, transitioning from just a physical vendor of software to cloud-based software and also cloud computing with their Azure computer competing with Amazon's AWS cloud. So power gauging at the bottom is bullish. I'd like to read the chart from them up. Why? Because that power gauge rating is your directional edge, whether you're an options trader, swing trader, investing for your 401k plan or your retirement. Knowing the fundamental potential for a stock is going to position you in the right direction. We then look to see if it's outperforming the market. And if it is, and the power gauge is bullish, we like to say that the market agrees with the model. Because no matter how good your fundamental outlook is, whatever you're using, market disagrees with you, the market always wins. And then we're looking for institutional buying, which we saw in two big splits in Microsoft. So we had a nice move in a stock dividend yield from about 86 all the way up to 115, and now Microsoft has been correcting with market, but really a pretty mild pullback compared to what many other tech stocks did. Now you can screen for bullish stocks. In the screen this morning, I screened for large and mid-cap bull stocks. Wanted the power gauge for all stocks in the Russell 1000 to be bullish. Looking for the analyst estimate trend to be positive, and actually all of our sentiment indicators, which we call expert opinions, as a whole, we want bullish. And then relative, there's that key measure of whether the market agrees with the model. And we're looking for volatile stocks. If you're going to participate in this market, I don't think you should be looking at defensive stocks. In fact, they blew up in the latter part of December and early January. The utilities and the consumer stocks that people had been gravitating toward the market is unsteady and uncertain. You want to be in stocks with potential to really bust out on the upside. So out of the Russell 3000, I found just 13 stocks this morning that met my criteria for large and mid-cap classic bulls. Now, classic bear, very important. Power gauge rating bearish, underperforming the market, and Chaikin money flow is red, not green, telling us that the institutions are selling stocks. So again, looking at win resorts from the bottom, power gauge rating was bearish, relative strength to the market, weak institutions selling, and then we've got our overbought sell signals on the chart. We have 6 pairs of buy and sell signals in Chaikin Analytics. This is a really simple pattern developed by Larry Williams. If a stocks that you like, and we measure like by the power gauge rating, or don't like, in this case, makes a new 8-day and gets overbought, the potential point on the downside, entry point rather on the downside. It's an exit point if you're stuck in the stock and looking for a rally to get out. But in this case, great opportunity to buy put options or do those vertical put spreads on win resorts. And the stock, in this case, since this pattern emerged, went from 175 all the way down to 990. So you need to see these patterns as they're unfolding in real time in order to be on the right side of the market. Now, summing it all up is this pyramid. And it encapsulates the very disciplined methodology that we teach here at Chaikin. This gives you a directional edge. At the top of the pyramid, power gauge rating is bullish. Industry group strength, as we said is important. So we like to buy cats, have strong industry price performance toward it. The bottom of the pyramid, Chaikin money flow, which measures institutional accumulation distribution, are unique way of looking at relative strength. It's a red-green heat map. And then in the middle, buy and sell signals. 6 pairs of buy and signals. You can go to our website, chaikinanalytics.com. Being told that the audio is deteriorating, I'm going to hand it off to Josh. Josh can take this back and get the audio strong.
Hello, everybody.
Apologies for that.
No problem. I'll go through the buy and sell signals that we have. We have 6 pairs of buy and sell signals in Chaikin Analytics. You can see them listed here. They all have their proprietary calculation for.
Well, let's continue on and see how we're doing here.
All right.
Dashboard in Chaikin Analytics.
Chris said just to reboot.
Honey, I know.
Hey, everybody. We're fixing the audio. Give us just 30 more seconds. I apologize for any inconvenience in the interim. You shouldn't hear any sound but me at the moment, and Mark will be back in hopefully in just 30 seconds.
Josh, I'm here. How's that sound now?
That was faster than I told them you'd be, Mark. You sound great.
Okay, let's do it. Apologies to everybody. Let's get back on top here. All right, so dashboard alerts define those signals. This is the dashboard from our iPad app. But we also found that people wanted to be pushed these alerts. They don't always sign in to Chaikin Analytics every day if they're on the road. So we created our daily email alerts back in May of 2018. And this is an example of what Chaikin members get in their inbox every day. If you subscribe to Chaikin Analytics, get the signals pushed to you and also other actionable alerts. The power gauge turns bullish or earnings estimates are revised and so forth. So on November 9th, HFC, Holly Frontier, an oil refining stock triggered a relative strength sell signal. Now the oil refiners had been strong Chaikin Analytics from a fundamental point of view. You can see that at the bottom of the chart. Power gating was bullish into the summer, late July, on all the energy stocks in the oil refining group, like Marathon Petroleum, Valero, so forth, including Holly Frontier. Now, we're often asked, how do you get out of a stock? The power gauge doesn't turn bearish. Well, this is how we do it. Something called a bearish tonality change. Our relative strength indicator goes from green to red with the stock has a fundamental change in personality. Investors have become bearish on the stock, and look at the Chaikin money flow, very bearish. So when we get a bearish personality change, we look for that first sell signal, which was what we call our relative strength sell. And this is a really powerful for traders and investors. A stock that's underperformed the market rallies above its 21-day exponential average and drops below it. We call that a relative strength sell signal. That's what we were alerted to here at 65.74. And the stock traded all the way down to 46, almost in a straight line as the market was cascading down to that December 24th Christmas low. So these are powerful signals. If you know about them, you can react to them. Now, let's take a deeper look at personality changes. Just to reiterate, it's a stock that goes from outperforming the market to underperforming the market. Red to green, or green to red if it's a bullish personality change. Let's look at a recent example of that. AMAT makes semiconductor manufacturing equipment with Lam Research, very strong all through 2017, early 18. Had a bullish power gauge rating, rallied from low 20s to over C. And then in April, it had a bearish personality change. Now the stock was at about 54 when that happened. And when we get a bearish personality change, it means that something fundamentally different is going on in the stock. In this case, the institutions were selling. But we look for that first sell signal. It came at $50 and AMAT's low was at $28.50. So it pays to be aware of these signals, and that decline came in spite of the fact that the market made new all-time highs in September. So it was coming against a very strong market trend. And that's why these personality changes are so important. Now, we screen for them in Chaikin Analytics. Our clients screen for them. And about a month ago, I screened, about 6 weeks ago actually, I screened for stocks that had recent bearish personality changes with particular interest in the ones that had a bearish power gauge rating, and Apple and Hess stood out. And we're going to look at Apple in a minute, but before we do, I want to share with you a signal that we've been coaching institutional investors on for over 30 years. Chaikin Money Flow was introduced in 1982, and I detected a pattern that's not documented in most of the online brokerage platforms that feature Chaikin Money Flow, or even in stockcharts.com. We call it Chaikin Bearish Money Flow Sell Alert. And the poster child for that in 2018 was Mohawk Industries. Home builders were bearish. We're going to see how that's turning around at the end of the webinar. Nice potential buy candidate. And Mohawk makes carpeting, so it was negatively affected by the weakness in the home builder stocks. What a bearish money flow seller. It happens when a stock down in a trend gets overbought, and Chaikin Money Flow, instead of going green, stays red. You see two examples of that here on the chart. One of them came at a price of about 225. The other one came at about 182, as Mohawk was heading down to a low of about 110. Now, the mother of all money flow sell alerts came right at the all-time high of 280. And that's exactly what happened in Apple. When Apple made it a new high in September at 230, Chaikin Money Flow stayed in the red. I created this indicator to fluctuate between red and green because typically when a stock has a 10-day rally and makes a new high, money flow turns green because institutions are accumulating the stock. In this case, smart money was exiting Apple at 230. Even though the power gauge still bullish and it was outperforming the market, this was a red flag alert telling you that smart money is leaving the stock, just as it did in Mohawk. So you want to be aware of that and be willing to take money off the table. I was talking to one of our investors in Chaikin Analytics who has very low cost Apple stock, $18 a share. Just didn't want it. Well, are you better off selling your Apple at around 30, watching it go down to 140, or paying the taxes? Think you're better off taking something off the table. If you're a trader, it's a no-brainer. Take your profits, let someone else be the bad holder, and worry about it. I'm just going to keep doing it. No? Okay. I'm going to turn this back to Josh. Josh, you feel like going through the rest of the webinar? I think you're perfectly capable of doing it.
Mark, I'm more than happy to do that if you would like. So right now we're looking at Apple, and what Mark was discussing was the bearish money flow sell alert. There's a powerful sell alert that we find when stocks make new highs.
Do it. Josh, do you want to take control now, please?
Oh, yeah, sorry, Mark. Give me 1 second. Let me pull up the deck.
Josh, if you can hear me, take control and you can finish up the webinar. Maybe answer some questions as well.
Absolutely. I'm just pulling up your deck now, and we will keep going. All right. Hopefully everybody can see the deck, and we're going to get down to Apple. Mark was on one heck of an alert, which is unfortunate to be broken up right in the middle of this sell alert. But it's a really powerful sell alert that we talk about a lot here at Chaikin Analytics. And this is the bearish money flow sell alert. And I want to make sure that we go over this. We teach people exactly how to identify this. We look for a new high while at the same time money flow goes deeply negative. This is a sell alert that most people don't know about, don't notice, and it's a great way to understand that there's possibly big downward movement coming. That was then confirmed by our bearish personality change. We look for these bearish personality changes to help us get out. There's no reason that you should be riding stocks from 220 down to 150, no matter what stock it is, Apple or otherwise. And Chaikin Analytics members were alerted by this bearish personality change. So again, a bearish personality change is where we see the relative strength go from outperforming to underperforming in the Chaikin Power Gauge. And you'll notice the Chaikin Power Gauge led the market here, alerting us that it was likely to roll over. So that Apple, oops. And one of the big things that we talk about here at Chaikin is how to minimize your exposure to danger and risk. And these alerts can really help you avoid the big landmines in your portfolio. Managing risk is so important. So here we can look at Halliburton. Again, we have a couple of sell signals here on Halliburton. Mark talked about our 6 proprietary buy and sell signals. So here we have the first sales signal came up way back in July. Again, you can see the stock rolling through its long-term trend line at the same time. Relative strength goes weak. The power gauge turns and remains bearish. Money flow is deep red. This is institutions selling. This, for anybody that had this in their portfolio, this was an alert to get out. And we have a great tool in Chaikin Analytics called the Discovery feature, which can show you potential swaps. So you can plug in Halliburton if it's in your portfolio into our Discovery feature, and it's going to give you a bunch of bullish ideas that you can look at going forward. Here, another sell signal. Now, if you play to the downside, if you play the bearish, these are great sell signals. They can help you identify great entry points for bearish trade. So for anybody that manages a long-term portfolio, a long portfolio, these tell you to get the heck out. And if you're down doing bearish trades, these are great sell signals that you can use to make money consistently on the downside. Now this is NVIDIA. So we're looking at NVIDIA here. Again, this had a bearish money flow alert. We had a new all-time high. And if we look down, we'll see, what did money flow do? It went negative. That tells us that institutions were using the price action to get out. They were using it to exit. Goldman Sachs then upgraded to conviction buy with a 305 price target. That was at 240. That was 50% ago. 50% ago. Again, you can see the bearish personality change that happens at the bottom. This tells us to get out. There's no reason. Chaikin Analytics members would know. Turns bearish. Relative strength goes negative. Money flows negative. That's a sign. Get it out of your portfolio. These are portfolio killers. They're absolute portfolio killers. You need to manage your risk, and part of managing your risk is understanding when to get out of the stock. When to get out. Now, earnings season, lots of opportunities in earnings season. Volatility is like gold to traders. We want to see volatility. It helps traders out. Volatility can equal opportunity. Stocks can move to extremes, and if you're prepared, if you're ready for it, then you can really do well through and after earnings seasons. So we can help you know if a stock is likely to meet, beat, or disappoint coming into earnings. Coming to earnings, you can see with Best Buy, bullish. Look down below here at our dynamic duo. Mark refers to these as the dynamic duo. I think it's a great term for them. When they are both green, you're likely to see future forward gains. And you can see your directional edge down at the bottom. Both of this is green. We're above a rising trend line. We get a great oversold buy signal here. Again, one of our 6 pairs of buy and sell signals. One of our oversold buy signals coming up just ahead of earnings. There we go. And off to the races for Best Buy. All right. There's a good question. So one of the questions coming in is, what is the relative strength versus SPY indicator? Is it our own or is it available on most platforms? So let me highlight this, and I'm going to talk about this for a second, and then we'll move on to the next example, because this is critical. If you want to outperform the market, you need to be in stocks that are outperforming the market. And what this indicator tells us, and I'll tell you right now, this is a proprietary indicator. This relative strength versus SPY, you cannot get on any other platform anywhere. Marc created it for Chaikin Analytics members. Marc has had a career of building indicators for professionals. And when he retired and came back out of retirement, he started to use that career of building for professionals, but he didn't do it for pros. He did it for you and me. He built indicators for you and I to use and let us buy into them and use them to make a lot of money. So the relative strength versus SPY tells us whether a stock is outperforming or underperforming in the market. If you want to outperform in the market, it's going to be awfully hard to outperform in the market if you own stocks that are constantly underperforming. So this is a very powerful indicator at the bottom. It's a proprietary indicator available only to Chaikin Analytics members. I love it. It's fantastic. Along with the Power Gauge Rating, these two are what Marc calls the dynamic duo. So that's Best Buy. And you can see that when the market agrees with the model and the model is bullish, we're above a rising trend line. This is what we call a classic Chaikin bull. Marc talked about it a little bit earlier on the webinar. We have testimonial here. We get a lot of these coming in. I talked to a number of individuals. 257% in 24 hours. That's an options trader there. We have a lot of option traders that use Chaikin Analytics to help them be the guide through earnings season, to help us understand when likely something to beat, when likely something to miss. Here's Philip Morris. Philip Morris had a bunch of oversold buy, overbought sell signals. You can see at the bottom. What did Philip Morris do all year? It underperformed the market all year. And all year, lower lows. This is for trend traders. This is a dream, and we can help you by identifying when things are underperforming and when they're likely to continue to underperform. Power Gauge Rating bearish the whole year, underperforming the market the whole year. The Batman and Robin, the dynamic duo here in Chaikin Analytics is going to lead you to profits. You can see ahead of earnings, we got a sell signal right ahead of earnings. Personally, this was my biggest trade last year. It was great. And you can do this over and over again with Chaikin Analytics. Now, coming up this week, we have a bunch of neutral stocks, but look, we also have a number of bearish stocks coming up. So one of our neutral plus stocks, so neutral plus stock is a bullish stock, and one of our neutral plus stocks that has good earnings potential coming up is United Healthcare Group. Look at the relative strength. This is a stock that's outperformed all year. Look at the power gauge. It is green, a little bit of neutral plus at the end here. Those are bullish stocks that are just underneath the long-term trend line right now, but they have bullish potential. And it's a great place during the sell-off to go hunting to find good bulls for a market rebound. So this is United Healthcare Group. And you can see, look at all the relative strength buy. There's another one of our buy signals. Look at all the buy signals along the way up that you could have used to get good entry points, whether you're long-term investing or shorter-term swing trading. All right. Bullish money flow buy alert right ahead of earnings. This can help be your guide. All right. Now, here is Citigroup. Citigroup is a good possible bearish opportunity at this point, or sorry, bullish opportunity at this point. It's neutral minus. We had an earnings beat, a strong rally. We're overbought at the moment. There's another proprietary Chaikin Analytics indicator. It's an overbought, oversold indicator that tells you about when the short-term highs and lows are happening. The power gauge and the relative strength help you give you directional edge. The overbought, oversold indicator can really help you with timing. This one's saying that this is not an opportune time to get into this. We're really overbought and about to ping up against our long-term trend line, not one that we want to sit on. Look up here. This is talking about pops, negative money flow. That's one of our bearish money flow sell alerts. We had a similar one in BlackRock. And you can see when these stocks make these rally higher and they do it on negative money flow, the next few weeks tend to be lower prices. These are great hidden signals. Right ahead of earnings, look at how money flow bottomed out. Right ahead of earnings and a sell signal. So again, there's another stock we're bearish on that has negative relative strength. It's underperforming the market. The money flow is negative on the rise up going into earnings. It reports before the bell tomorrow. So we think that this one is a bearish idea going forward. I'm sorry, this relative strength indicator, it's really cool. It's also proprietary, and I'm not going to get into what period it uses or any bit of the calculation. I apologize about that. I know that people are probably very interested what the calc is for that. I can tell you, it's very cool, but that's all I really can tell you about it. It is a great indicator, a great indicator. Look at BlackRock. It starts to flash bearish, and the relative strength wanes. And then look what happens with the price. That's the highs. That's it. So this was a good play all the way down. And you could have used the overbought, oversell, or the signals. These buy and sell signals done for you, right? In order to help give you an estimation of when is an opportune time to get in and get out. So you have these relative strength sell signals, you're overbought, and then look at these trades. Now, if you're just shorting stocks, these are good outright shorts. If you're using options, I teach options here. I know what the return looks like on a move like that using a vertical debit spread. You're going to be very happy. Let's look at a couple others. I don't want to hold everybody all night. I really appreciate everybody hanging out. Just as I was talking about options, this is an idea for bearish put verticals on BlackRock. One is short term. It's just a January idea. This is more of an earnings trade with a huge upside for limited risk. We prefer verticals. These, by the way, are straight out of our options play widget inside of Chaikin Analytics. So this comes with it. It's a great analysis tool. So if you're new to options, this is a great way to keep you in trades with good risk reward and odds of success. And if you're advanced in options, listen, I'm advanced in options. This thing has some cool stuff that helps me with my option trading also. It does a lot of math for me that makes things quick and easy for option traders. So you can see we prefer verticals. Here's a play for BlackRock going out to March for a move lower. 230% possible return on limited risk. Look at the risk of the vertical versus the risk of the outright. You save almost $500, $400. That's a 33% haircut just to your cost. So we prefer verticals. This is why. The shorter duration one out to January 25th even higher return for an even lower risk. So options play has the ability to help find out some of the earnings trades that you can pair with the great research that Chaikin Analytics brings you. Here's Schlumberger. So Schlumberger is in the oil and machinery services. You can see we've been bearish on it more or less the entire year. The market has agreed with the model. Negative, underperforming the market, terrible money flow, and look what it's done. It's gone south. Everything red in Chaikin Analytics, this thing's going south. Couple of sell signals to help you with entries right ahead of earnings. Got a couple of nice earnings trades in there as well. That was your first sell signal that you could have used right before earnings. To play ahead of earnings, we like to use options as well as defined risk. So here's an options play for Schlumberger. This is just a suggestion. Again, straight out of our options play widget. And you can see here that the 41.5 put, which is a slightly out of the money put option, has very low risk and very high reward. This is a play for Jan 25, so this is very much an earnings-based play, but really high upside for you on very low risk. So you can identify these using Chaikin Analytics. Now that was a couple on the downside. This is a screening screen that Marc put together, and I see there's a question on screens. So this is a screener. It's right in Chaikin Analytics. We have our own screener internally to use our proprietary, so you can screen on our proprietary indicators. You can screen on all the proprietary indicators that Marc built for Chaikin Analytics members. You can just screen on all of them, and you can predefine your screens and set them up. This is a screen that Marc ran. He took the S&P 500 and he whittled it down to 15 bullish neutral plus names, which are bullish rated stocks that have just closed below the long-term trend line recently. These have good estimated trends. These are earnings trends that are positive. The experts like it. When experts like it, when the analysts constantly are raising up price targets, that tends to portend higher prices for stocks, for the stocks that they're upgrading. So these have good earnings and experts behind them inside of the model. They're outperforming the market. They're mid and large cap, and they have some bounce to them. They have a little bit of beta. And so these are the names that we would go looking for a bounce. Here's CRM. CRM didn't even make a lower low when the market did. We have a stock that has been outperforming, that is bullishly rated, neutral plus at the moment. It's rallied up, it's overbought at the moment, but if we get a pullback in the market, maybe this moves down closer to oversold. CRM is an idea. Remember, we took the S&P 500, we whittled it down quickly, a couple clicks to just 15 ideas that we can then go through and eyeball, just read it up. It's green, it's green. It's a little overbought, so not the time necessarily to jump in right now. Money flow is generally green, right? Green up and down. Want to wait till we get closer to oversold, but that's a good setup. So yeah, you can predefine these screens however you want. If you want to hunt bearish names, we could do that too. Right? So Chaikin Analytics, proven stock selection system. You need a way to identify what stocks are going to work. Chaikin is proven. Marc talked about the model earlier. The model has been set in stone for over a decade and has outperformed, it has produced over and over and over again. And that's because it's unemotional. It's a model. So it comes with option play ideas, daily email alerts. We haven't even talked about this. We send out a morning note every morning, Chaikin Analytics morning insights written by our chief market strategist, Dan Russo, a chief market technician. In fact, he's a co-chair of the New York City Charter Market Technicians Association. He sends out a morning note. Normally, Chaikin Analytics is $21.95. But Marc has an offer for you. webinar special, $18.95. You can go to chaikinanalytics.com/earnings, or you can contact us by phone, 877-697-6783. There are a couple questions I may not have gotten to. You can call us. I have my colleagues are hanging out. You can talk to them right now. Ask them any questions that I missed or maybe Mark didn't get to. Again, that's 877-697-6783, 877-697-6783, or go to www.chaikinanalytics.com/earnings. Now, we looked at a lot of screens today, a lot of charts. We looked at a screener. We have option ideas, but there's more. Chaikin Analytics members, as I mentioned, get access to our morning insights, but I also host a weekly session on Monday with our market strategist, Dan Russo. All right, Dan Russo, our chief market strategist, does a weekly session every Monday. You can ask our chief market strategist any question. Former market maker, when was the last time you were able to just ping a market maker and ask them a question? You can do it every Monday as a Chaikin Analytics member. You get unlimited coaching and support from the team that I'm a member of, the Chaikin Analytics Client Success Team. I'm a member of that team here. Unlimited coaching and support, unlimited. One-on-one coaching, if you'd like. And I mentioned Dan Russo's Morning Insights with ideas in it, curated ideas by our chief market strategist. If you sign up tonight, then you will receive 3 months of our Mastering the Bear insights. Mastering the Bear, 3 months of Mastering the Bear. It is bearish focused ideas from our chief market strategist, Dan Russo, specifically focused on that. So again, give us a call. $17.95. All right. Mark threw an extra slide in there on me. Save $400, $17.95 plus 13 weeks, a quarter of Mastering the Bear included. We can have you, we do an onboard session twice a week. We can have you on an onboard session tomorrow. We have a number of group sessions that we hold exclusively for members every week. You can join them. One is on options. If you're interested in chatting options, I run an option session twice a week. So you can talk to an option expert twice a week. Or email us anytime. We'll answer your questions anytime. That's part of what's included. So $17.95, 13 weeks of Mastering the Bears included. Go to www.chaikinanalytics.com or call us at 877-697-6783. That's 877-697-6783. Thank you, everybody, and have a wonderful night.